I'm Grant Walker. Welcome to Heads Up for Friday the 8th of May. Weekend Review will be streamed from 4pm today, and Heads Up will return 10am Monday. In coffee news, Starbucks is launching a cookie straw to tie in with the launch of the new S'mores flavoured Frappuccino. The edible straw is being offered only in the US and Canada and is described as a rolled sweet wafer biscuit lined with rich chocolate ganache. The straw is priced at 95 cents, but baristas will be giving out free ones while supplies last. Biscuit-themed receptacles have become all the rage in the US in recent years. New York bakery Dominique Ansel, which invented Cronuts, is famous for its cookie shots, a small cup made from chocolate chip biscuits that's filled with vanilla-flavoured milk. A bonus is that a cookie straw or cup is not as bad for the environment as a plastic straw. In business news, a Warehouse update. Warehouse Group, New Zealand's largest publicly listed retailer, posted a 5% gain in third quarter sales, which it said was in line with its expectations and meant it was on track to meet its forecast annual profit. The Auckland-based retailer said sales rose to $635.1 million in the 3 months ended April 26 from $604.8 million in the year earlier period. The sales growth lags behind the 8.6% increase in the year earlier third quarter. Warehouse is focusing on reducing costs and improving its products and productivity as it seeks to get higher returns from the hundreds of millions of dollars spent overhauling stores and buying new businesses the past few years. Chief Executive Mark Powell says while this is a solid performance, particularly on the back of a difficult first half trading period, the retail environment continues to be highly competitive and our focus remains on leveraging year-on-year profit growth for the second half year. These third quarter results are in line with expectations and consequently our full-year profit guidance remains the same. Warehouse in March posted a 19% drop in adjusted first half profit to $37.2 million and said annual earnings on the same measure, which excludes one-time items and is the basis for dividend payments, would be between $52 and $56 million, down from $60.7 million a year earlier. The company's 92 Red Sheds general merchandise stores, which makes up the bulk of its earnings, increased third quarter sales 3.8% to $381.1 million. Same-store sales rose 3.3%, its 17th consecutive quarter of growth. Store sales benefited from a strong performance during the back-to-school period, including the first key trading period for its Schooltex school uniform business, acquired from indebted retailer Postie Plus Group last year. The company said sales in the home category and apparel and leisure were also positive, with apparel contributing to an improvement in gross margins. Mr. Powell said the third quarter saw a much improved performance on a challenging first half with solid sales grown and improved gross margin. Its 65 Warehouse stationery stores increased sales 2.9% to $70.2 million. Same-store sales rose 2.1%, its 23rd consecutive quarter of growth. The company's Noel Leeming appliance stores increased sales 5.4% to $154.8 million as it benefited from a rebranding and new stores, gaining market share. It closed 2 stores during the quarter and opened 1 new one. Sales at the Torpedo 7 Group rose 8.5% to $30.6 million. Separately, Warehouse said the indicative interest rate for its planned bond sale would be between 5.3 and 5.55% per annum. The company plans to sell as much as $125 million of 5-year bonds to refinance $100 million of bonds maturing next month and for general corporate purposes.
NBR Radio with the Property Press. It's out now to show you around.
In real estate news, it's been an office opening a week for the past 3 weeks for Harcourts. The newest Harcourts offices are in fast-growing Silverdale on Auckland's North Shore, in Tairua on the Coromandel Peninsula and in the Christchurch suburb of New Brighton. Harcourts CEO Hayden Duncan says it's fantastic to see the continued growth of the Harcourts brand with the opening of these new offices spread across the country. As one of the first businesses to reopen in New Brighton since the Canterbury earthquakes, the opening of Harcourts New Brighton represents a significant milestone in the recovery of East Christchurch. He says an increasing number of property owners in the East are now receiving cash settlements and selling their properties as is where is. This, coupled with renewed interest from developers, is signalling that the time is right to lay the foundations for a positive future for New Brighton. The Harcourts Silverdale office is the 5th office opened by Harcourts Tandem Realty, which covers the entire coast north of Auckland. The Silverdale office offers a complete range of real estate services, including residential, lifestyle, commercial and property management. Mr. Duncan says Silverdale and Millwater are within commuting distance to Auckland, and the area is undergoing rapid development with the construction of high-quality residential property. In sponsorship news, despite the Blues' poor on-field performance, health insurance newcomer NIB is upgrading its sponsorship to become the team's principal sponsor for the 2016 season. BNZ has been on the front of the jersey since 2010. NIB's deal will expire in 2019. The Blues have won only 2 of their 11 games this season, but both NIB and a marketing sponsorship expert say the investment will pay off, especially for a challenger brand. NIB Chief Executive Rob Hennon acknowledges the Blues have experienced a tough season, but says it's a perfect alignment. He says the thing about sports is that it's up and down, and as a health insurer, we're there for when times get tough. Richard Howarth, General Manager of sports sponsorship consultancy Gemba, agrees and says support for team sports is pretty consistent. He says the Warriors are the perennial almost made it team and tease us with winning the grand final but never quite get there. But we don't see people saying they're not a supporter and Vodafone pulling its sponsorship. The former Vodafone head of sponsorship says Gemba's research shows support for teams isn't dramatically affected by their performance. Mr. Howard says, but whether people actually turn up to the matches, that may be influenced by the team's performance. He says NIB's choice of the Blues makes sense because it's new to the market and is in the process of building brand awareness. NIB's Mr. Hennon refused to disclose the cost of the sponsorship, only saying that it was a significant investment from the marketing budget. Mr. Howarth said it would be inappropriate for him to give an estimate, but a senior sports sponsorship dealer who wants to remain anonymous says a rough estimate would be between $350,000 and $400,000 annually. Since taking over the Tower Medical business in 2012 and launching in late 2013, NIB has executed several marketing campaigns and is aggressively challenging incumbent Southern Cross Insurance. Nielsen rate cards show that brand spent $6.4 million on advertising last year. For the half year ended December 2014, NIB New Zealand reported 3.3% policyholder growth compared to the previous corresponding period. Revenue increased 8.1% to $72.9 million, but profit fell 2.4%.
NBR Radio with Bayleys, New Zealand's leading commercial real estate company.
I'm Grant Walker. Welcome to Heads Up for Friday the 8th of May. Weekend Review will be streamed from 4 p.m. today, and Heads Up will return 10 a.m. Monday. To a political poll, a slim majority of NBR subscribers believe room should not be made for Judith Collins at the cabinet table again ever, while the remainder disagree on the speed with which she should be reinstated as a minister. The poll was held in the wake of Ms Collins beginning what has widely been interpreted as a bid for political redemption, with the former Minister of Justice, Accident Compensation and Women's Affairs opining on the Prime Minister's ponytailgate gaffe and appearing on TV1's Q&A program last weekend to restate her claim for a cabinet portfolio. How much of a chance Ms Collins has of fulfilling that ambition is unclear. Asked about her prospects, Mr Key answered with what NBR political and economic editor Rob Hosking described as his usual combination of smart aleckness and inscrutability. Mr Key told Parliament, "We have a caucus full of talent and opportunity. Judith happens to be one of its members. There are many others, and if one day an opportunity opens itself, I am sure that Judith, along with many others, will be wanting to put her hand up. It's nice to have some fantastic people to choose from." For their part, 18% of participating NBR subscribers believe Ms Collins should be immediately reinstated to the cabinet, 31% think she should be offered a place when one becomes available, and 51% are of the view that she's had her final chance and should remain in the political wilderness. Political commentator Dr. Bryce Edwards isn't surprised by the latest poll result. He says those results are in line with what I believe the National Party support base and the wider New Zealand public feel about Judith Collins. For many national voters, he says, although sympathetic to this national government, Judith Collins has been an albatross around John Key's neck. Regardless of how many national voters may feel about her as a competent politician, they can see she's done a lot of damage to this national government and, rightly or wrongly, she's tarnished due to the dirty politics and Aurovita controversies. If it weren't for those scandals, Dr. Edwards believes she'd now be the leading contender to replace John Key as National Party leader sometime in the future. She still has a lot of positives about her. He says you do need polarising politicians in politics, and Judith Collins' boldness makes her an attractive politician for those on the right of the spectrum, especially when compared to some of the other bland National Party MPs. And she's a very good politician. But, says Dr. Edwards, her positive attributes are now fatally overshadowed by the controversy she's been embroiled in, particularly her association with dirty politics in the public's mind. To beverages we go. PepsiCo is removing the sweetener aspartame from Diet Pepsi in a move that puts consumer perceptions ahead of science, according to observers. The number 2 American soft drink company will instead switch to sucralose, a less controversial but still artificial sweetener. The change is the boldest reformulation in the beverage industry since Coca-Cola's new Coke Fiasco in 1985. It's also in response to consumer surveys showing aspartame as the main reason Americans are shunning diet colas. Diet Pepsi volumes fell 5.2% in the last year, according to industry tracker Beverage Digest, while volumes of the market's leading Diet Cola, Diet Coke, plunged 6.6%. In announcing the change, PepsiCo repeatedly described the new Diet Pepsi as aspartame-free. In a statement, Seth Kaufman, a senior vice president of PepsiCo North America Beverages, says Diet Cola drinkers in the US told us they wanted aspartame-free Diet Pepsi, and we're delivering. The change comes at a time when consumers are showing preferences for natural foods. Both brands have brought out colas using the stevia plant as a sweetener, but these don't qualify as calorie-free. To commercial news, Auckland design and build company Box has moved into the top floor of the former Kiwi Bacon factory on New North Road in Kingsland. The move will allow the company to better showcase products in the warehouse-like office. Over the past 5 years, the company has expanded from 2 to 25 staff. Box shares the 380 square metre space with Dorrington Atchison Architects. The fit-out was designed by Sam Elliott of Box and Sam Atchison of DAA, with the aim of combining old and new features to soften the industrial look of the concrete floors and steel rafters where Ethernet cable is suspended. Instead of a traditional reception desk, visitors are welcomed into an entrance area modelled on a living room, where a long leather seat faces cabinetry with a TV, a jug, a toaster from the 50s as well. Architect Tim Dorrington says the various fit-out features reflect a retro feel enhanced by a standard lamp and hemp drapes. A former lift shaft, once used to transport carcasses between the upper and lower level of the building, has become a small meeting room the size of a train cubicle, with bench seats facing each other, lit by concrete and bamboo pendant lights. More componentry features include an 8-metre-long galley kitchen with a gaboon ply cabinetry and a Decton de Mousse benchtop on one side, with black melamine cabinets.
NBR. With a National Business Review smartphone subscription, you can read or listen to the latest from NBR online. And for a limited time, it's free. Join NBR's Intelligent Business Network today and get free smartphone access to NBR online until August 31st. NBR doesn't do sport, weather or horoscopes, just timely, relevant, useful and insightful business news. So for business news you can use for free, visit nbr.co.nz/free.
Let's talk tall. The world's cities are in the midst of a skyscraper building boom as a means of tackling major economic and geographic challenges. As Auckland comes to grips with intensification to fit another 700,000 people into the city over the next 30 years, it may have to look at other cities where offices, apartments, hotels, shops and recreation facilities are housed within a skyscraper. A Knight Frank report says skyscrapers, buildings over 106 metres, are a rising tide in the modern global city. In 2009, there were 19 skyscrapers in the world with heights of more than 304 metres. Today, there are 79, 40% of which are in China and 28% in the United Arab Emirates. London has added 23 new skyscrapers since the beginning of this century, compared to 17 in the preceding 40 years. New York added 4 new towers last year. Dubai has built nearly 190 skyscrapers since 2000, and Shanghai more than 90. In Auckland, work is due to start next year on Chinese developer NDG's $350 million 209-metre 52-storey skyscraper on a prime inner-city site off Albert Street, the second highest building in Auckland after the Sky Tower. The tower will contain apartments, shops and possibly a hotel by the time it's finished in 2020. Knight Frank's report says economic and population growth in cities means either moving outward or upwards. Moving outwards breaks up business clusters and creates political problems, such as allowing development on greenfield land around cities. This moves the debate in favour of building upwards to provide more housing and offices. The new enthusiasm for skyscrapers is partly one of city status. Less mentioned are recent changes in how companies perceive offices. In the past, offices were typically viewed as a cost companies wanted to minimise, with little thought given to how they could boost productivity. During the 70s and 80s, offices that were out of town, low-rise and cheaper grew in popularity. Skyscrapers, like the city centres they occupied, were viewed as expensive and in decline. Firms now increasingly view real estate as a means of controlling a much bigger cost, staff retention. Losing star fee earners is damaging for business, and even the cost of replacing support staff can be higher than the rent paid on their workstations. Skyscrapers are one of several means companies have to make the office an exciting place. Combined with innovative fit-outs ranging from games rooms to cafes, showers and private areas for work, skyscrapers can become the catalyst to change people's working habits and encourage business integration across a company. Knight Frank's report says skyscrapers are not just popular with tenants, they have the gravitas to attract top global companies, which gives confidence to other firms and investors to back a major regeneration scheme. That a growing number of large corporates are willing to be the anchor tenant in big towers, even if it means moving to another part of the city, is behind a new construction wave around the world. Another attraction of skyscrapers is the diversity of the tenancy schedules found in many towers. Multiple tenants with leases expiring at different times increases exposure to the rental cycle, creating plenty of opportunity to asset manage a tower to exploit changes in the leasing market. To Solid Energy. State-owned coal miner Solid Energy has confirmed job losses for more than 100 of its staff at the Stockton mine near Westport. On Thursday, Labor MP Damien O'Connor said further restructuring plans would be announced yesterday, with any job losses likely to be a shock for the West Coast. The company had already foreshadowed more redundancies in March because of slumping global prices for coking coal. Well, yesterday, Solid Energy confirmed 151 jobs will be cut from the mine, consisting of 113 redundancies and the remainder through already vacant roles. Engineering, Printing and Manufacturing Union West Coast organiser Garth Elliott says nearly 900 jobs have been lost at Solid Energy since 2011. Solid Energy Chief Executive Dan Clifford told Parliament's Finance and Expenditure Select Committee in March plans were underway to stem the company's financial losses and reductions will be inevitable on the basis of those plans. Mr Clifford said staff were being kept informed of the company's difficulties and decisions are not a matter of days or of double-digit months. Chairman Andy Coupe would not speculate at the time on whether the company might fail, but said there were a number of potential outcomes from current discussions with its banking consortium and said Solid Energy was expecting no further support from the Crown. Finance Minister Bill English questioned whether Solid Energy remained commercially viable. Restructuring and cost-cutting had reduced Solid Energy's break-even price for coking coal to between $120 to $130 a tonne, but it was basing its plans on a price in the year ahead of US $110. Solid Energy has also said it risks breaching its banking covenants in September 2016. Mr Coupe said there were no immediate cash flow problems, but it was unlikely to be enough to overcome the September 2016 issues. He said, "My view is that we cannot see the refinancing of our debt facilities as realistic absent a restructure of our liabilities." The government helped bail out Solid Energy in 2013 and also extended a $103 million indemnity to the company just before the general election last year. To television, so much for Netflix snaffling up content rights. Sky TV says it's just signed a multi-year expanded deal with Disney. The new contract gives Sky and its new streaming video on-demand service Neon exclusive New Zealand rights to upcoming films from Disney, Pixar, Marvel and Lucasfilm, including Marvel's Avengers, Age of Ultron, Cinderella, Inside Out, Big Hero 6, Guardians of the Galaxy and Star Wars The Force Awakens. Neon will also add more recent Disney titles from June. As part of the expanded deal, Sky will launch a new family movie channel, Sky Movies Disney, on July 1. Sky Movies Disney will be available as part of the movie tier and screen Disney's family movies in HD. It will join 3 Disney channels already available on Sky: Disney Junior, Disney Channel and the recently launched Disney XD, available to all Sky's domestic customers as part of their basic package. Shortly before Netflix launched, Sky inked a new multi-year deal with HBO, which also covered both broadcast and internet rights. Sky is holding the line. The question for shareholders, which might not be answered until its half-year result, is at what cost?
NBR Radio with Hotel de Brett, your home away from home, but with better service. NBR Radio.
While you were sleeping, Wall Street advanced amid better-than-expected corporate earnings, as well as positive weekly jobless claims data. A Labor Department report showed initial claims for state unemployment benefits rose a mere 3,000 to a seasonally adjusted 265,000 for the week ended May 2. The data were better than economists had expected and offset Wednesday's disappointing ADP payroll statistics. All eyes are now on today's government jobs number to help gauge if the US labour market held steady or moved in line with weakening consumer sentiment and GDP. So in late trading in New York, the Dow Jones Industrial Average rose 0.64%, the S&P 500 added 0.3%, and the Nasdaq advanced 0.54%. US Treasuries and the US dollar also rose. In Europe, the Stoxx 600 index finished the session marginally higher from the previous close, ending at 388.98. Germany's DAX rose 0.5%, France's CAC 40 fell 0.3%, and the UK's FTSE fell 0.7%. To sustainability, the most sustainable house in New Zealand has been built in Christchurch to a 9 Homestar rating, certified by the New Zealand Green Building Council. The 140 square metre two-storey home in Church Square, Addington, is due for completion in June. An adjacent single-storey house in the development is also targeting a 9 Homestar design rating. The home features rainwater harvesting and grey water, water-efficient fittings, photovoltaic solar power, hope I said that right, and energy-efficient lighting and electrics. All paints and sealants are low VOC or volatile organic compound, and other materials are certified by Environmental Choice New Zealand or Forest Stewardship Council. A solar wall ventilation system uses the sun's energy to preheat ventilation air, substantially reducing heating expenses. Slab edge insulation to stop heat loss from concrete floor slabs, and hydronic underfloor heating also keeps the home warm. Developer and architect Bob Burnett is an advocate for sustainable design. In advertising news, Inland Revenue is attempting to free up its call centres by splashing out on an advertising campaign that encourages people to work out if they're eligible for a tax refund online. The campaign, which was executed by Clemenger BBDO, parodies 1980s workout videos and is accompanied by a 1-minute 30-second video. After an OIA request by the lobby group Taxpayers Union, the IRD revealed that the campaign cost $418,308. Less than previous years, they say. The IRD says initial results are encouraging after the campaign launched a month ago. 17,000 calls fewer than forecast to the line that deals with tax refunds. 36,000 registrations for its online service MyIR, which is up 34% on last year. 127,000 views of its campaign page, 22% up on last year. The video has had 20,000 views. IRD Customer Services Manager Eleanor Young says the campaign is intended to encourage customers to use online services where possible and to relieve the taxman's call centres. She says more than 1.8 million customers are already registered for MyIR online account. It means they don't have to wait on the phone to check the balance of their IRD accounts, track their tax refund, retrieve their IRD number, check their student loan balance, or submit a GST return. The IRD says the campaign targets those eligible for a tax refund. Ms. Young says given the youthful target audience, the campaign is predominantly online and the format is engaging. The video cost almost $41,000 and dedicated website pages cost almost $22,000. At a recent advertising awards ceremony, the IRD took home several medals for a $1.1 million ad campaign that cracked down on student loans.
NBR Radio. With Clooney Restaurant now offering Auckland's most exclusive private dining room. NBR Radio.
What's in today's National Business Review? A year ago, most experts, including the Treasury, were tipping official interest rates would be at 4.5% now. That would have meant floating mortgage rates would be well above 7%. Rob Hosking writes in today's National Business Review print edition, last week Reserve Bank Governor Graham Wheeler, for the first time since the Canterbury earthquakes in early 2011, opened the door to his next move being an interest rate cut. Calida Smiley previews the new reporting season, with analysts forecasting strong earnings per share growth, although strains in some sectors are starting to show. Meanwhile, the Financial Markets Authority is standing by its chief executive amid revelations he was previously a director of a company recently fined a record £13.3 million by the British regulator. Hamish McNichol has that story. And Jason Walls went to TEDx and found a Gisborne-based doctor who's come up with a way of detecting potential eyesight problems with a smartphone. All this and more in today's National Business Review, out now. Ports poll. Auckland Mayor Len Brown says Ports of Auckland will never be privatised in any form during his watch. Despite calls from both sides of the Bitter Wharf extensions argument for the port's operations to be privatised while the council retains the land, Mr Brown says he ruled out selling any of the council's strategic assets, such as the port and airport shares, in his election manifesto, and he hasn't changed his stance. In an NBR online reader poll, 54% want the port fully privatised, 23% want it partially privatised, 20% don't want any privatisation, and 3% didn't know. Protest group Stop Stealing Our Harbour, or SSOH, says while it doesn't have a stance on port privatisation, anything that would make Ports of Auckland more accountable and transparent would be good. SSOH leader Michael Goldwater says the protesters want the wharf extension stopped to maintain the integrity of the harbour. He said the broader issues of privatisation are not in our remit. He says SSOH has plenty of alternatives for port growth. He declines to discuss them with NBR and says it's not up to the group to determine a port strategy. Despite the council and ports company coming to a compromise last week over the construction of the smaller wharf and abandoning the other longer wharf until a council future port study is done, Mr Goldwater says it's illogical to continue with the study as it predisposes an outcome. He says we want the Waitemata Harbour preserved in its current state. Councillor Cameron Brewer says it's time to debate the privatisation issue because the city is facing huge infrastructure spending over the next decade. He says some of us are urging the Mayor to put figures on the table showing the costs of retaining assets, what they would sell for in a privatisation scenario compared to what dividends will be generated over the next decade. He said we need a full and public debate on this issue, and we missed the opportunity in the long-term plan. Aucklanders have the right to know the options and have a say on what the city should do.
NBR. Need to hire? Try our online recruitment platform www.nbrtalent.co.nz.
To the banking sector, ASB Bank enjoyed a particularly strong March quarter with its new mortgage lending to those with at least 20% equity in their homes, nearly doubling to more than $1 billion compared with the December quarter. Reserve Bank figures released at the end of last month have already revealed the March quarter was a bumper season for mortgage lending for banks overall. The central bank's figures show mortgage lending by registered banks surged 37.5% from the same quarter last year, and nearly 42% from the December quarter to more than $3.2 billion. On those numbers, ASB's share of total new mortgage lending jumped from just over 14% in the December quarter to 23% in the March quarter. ASB's mortgage lending to those with 20% equity in the March quarter compares with a $596 million increase in the December quarter. That surge took the bank's total net increase in mortgage lending in the March quarter to $746 million, compared with $233 million in the December quarter. ASB's mortgage lending to those with less than a 20% deposit has been shrinking rapidly since the Reserve Bank brought in restrictions on such lending in October 2013. It was the most exposed of all the banks to such lending. In the June quarter of 2013, such lending accounted for more than 73% of ASB's new mortgage lending. But ASB's disclosure statement shows the bank's profit in the latest 3 months was dragged down by a two-thirds jump in charges against profit for bad debts compared with the March quarter last year. Net profit for the quarter rose 3.4% to $213 million, taking profit for the 9 months ended March to $657 million, up 5.6%. Charges for bad debts for the 3 months jumped to $25 million from $15 million in the March quarter last year. Net interest income rose a healthy 8.2% to $421 million in the 3 months. In business news, Aurovida has bought a majority share in a large Whakatane water company as it looks to upscale its export of artisan bulk water into China, which began in March. According to Aurovida Director of Branded Business Mark Mitchell, a fortnight ago, Aurovida signed a deal with Living Water Enterprises, a company he says is one of the biggest water manufacturing facilities in New Zealand. Mr. Mitchell declined to specify what percentage shareholding was acquired by Aurovida or for how much. Mr. Mitchell says this water quality is absolutely excellent. It has an excellent pH, and being soft water, it's very drinkable with good taste. We've done a lot of research across the whole New Zealand market, and this was one of the best waters you can find in the world in terms of silica content, which is a building block for life. Founded in 2011, Aurovida exports high-quality New Zealand water, seafood, meat, milk, dairy, fruits, wines and chocolate to China. In March, it began exporting 10-litre boxes of its water to China following a full market analysis. An Aurovita spokeswoman says in China we see a lot of imported water only occupies the table water space, which is typically bottled water. The household water, which people use at home and the offices, are predominantly by local players. This is where we see opportunity. We wanted to bring the premium imported bulk water into China in households and offices, but to be priced more cheaply than the smaller imported bottled water, but more expensive than the local water. Although there are other New Zealand water brands competing in the Chinese market, such as Antipodes, it's understood they're exclusively operating in the bottled water market. Aurovita's goal is to export 80 shipping containers a month of the water. Each container holds 21,000 litres of the boxed water, or 2,100 boxes, by the end of the year, and to have exported up to 3,000 shipping containers of water within 5 years. To meet the demand, Living Water Enterprises is moving to a 24-hour-a-day operation and is expected to build its workforce twofold over the next few years, according to an Aurovita media release. And according to the Aurovita spokeswoman, global growth in bottled water, which generally has a shelf life of about 2 years, has neared double digits year on year, while demand for safe, trusted bottled water has been even stronger in India and China. In banking news, the Heartland New Zealand Bank is welcoming the removal of the overhang created by Quadrant Private Equity's 9% stake. Yesterday, the broking firm First New Zealand Capital sold the stake Quadrant gained in February last year as part payment for the Seniors Money International reverse mortgage business Heartland bought for $87 million. The shares Quadrant sold were issued at a nominal 90 cents each, and First New Zealand Capital sold them yesterday at $130 or $53.5 million. Heartland's chief executive, Jim Greenslade, said he's pleased the overhang has been removed and says he expects the sale will have increased the diversity of the company's shareholders. Quadrant was always going to be a seller after the 12-month lock-up arrangement agreed to at the time of the seniors' money purchase, according to Mr. Greenslade. He says they've always been a financial shareholder rather than a strategic one. The company has been trying to increase the diversity of its shareholders lately and would particularly like more Australians, both institutions and retail, on the register. Shares in Heartland, which is a registered bank, rose to $132 after the sale. Although they've risen from as low as 86 cents a year ago, they've eased from $142 in March. The seniors' money purchase was part of Heartland's strategy to diversify the business in niche areas where it doesn't have to compete with the major banks.
You're listening to NBR Radio. Upgrade to My NBR Radio with a smartphone-only subscription to NBR Online today for free and receive unlimited access to NBR Online on your smartphone until August 31st. Visit www.nbr.co.nz/free.